Meet Justin. He's recently engaged and is shopping for a used car. With a wedding right around the corner, he's hyper-focused on not taking on more car than his budget can handle. He's seen friends and family make mistakes with big car payments that go on for 6, 7, or even 8 years, and he doesn't want that kind of stress. After all, who wants a car you can only drive on the 1st and 15th of the month when you can afford to put gas in it? So, with all of that in mind, how does Justin make sure he's not overdoing it with this car purchase? One way is to follow a great budgeting rule of thumb when it comes to transportation expenses. And that is total vehicle costs, including payments for the car itself, insurance, gas, maintenance, and everything else, should ideally be no more than 10% of your pre-tax income. To be clear, that's typically not a lot of money, especially when compared to what you see other people drive and when you realize they're spending way more than that. Still, let's see what implementing this rule of thumb might look like in Justin's situation. His monthly income is $3,500. 10% of that is $350. And following the rule of thumb, that's the max Justin should allocate to his total monthly transportation costs. After accounting for gas, insurance, and everything that goes into keeping him on the road, Justin should probably shoot for a car payment of no more than about $200 per month. And while he might be able to stretch out the loan for 6 or 7 years to help make that happen, doing so usually isn't a good idea. That's because it could quickly create a negative equity situation where Justin owes more on the car than it's worth. In fact, it's typically a good idea to keep the length of auto loans to 5 years or less. The other big thing to think about with car loans is how they might affect your future. For example, what if you get PCS orders and your car can't come with you? Or what if you start a family and your single-person car no longer makes sense? The point is, a lot can happen by the time a car is paid off, and having a big payment could make things difficult when they don't need to be. So, back to Justin. He knows how much car he can afford, he knows not to stretch his loan too long, and he knows to think about how this purchase can impact his future. Now it's time to go shopping.